There are specific habits that great traders do that not so great traders don't do. And there are 12 habits of highly effective traders that I've observed over the last 8 years. And I've seen very successful, consistently profitable traders consistently are doing these habits that lead them to ensuring that they can have profitable trading results with minimal stress and they can draw an income from the markets. So what I'm going to do in this video is I'm going to run through the 12 habits of highly effective traders that I've observed through working with clients, working with my students, and observing thousands of traders over the last 8 years. So let's get into it. Now, the first habit of highly effective traders is they have a high value on doing the action steps that lead to consistent profitability. You know, many traders have this idea in their mind that they want to be a consistently profitable funded trader that gets payouts from the markets. And they want to be able to do that with relatively little stress and little emotional volatility. But then when I look and dig deep and I look at their actual actions and what they're doing day to day as traders, is that they don't have a trading plan. They don't have any mindset tools or mindset processes or mental models that they're implementing. And they're leaving their emotional part of their brain highly activated. And they don't have a structure and a process and something to guide them to get into the market, get out the market. And so when I look at their actual actions, the actions they take, it shows me that they're not truly dedicated to that end goal of being a funded, consistently profitable trader. Because if they were truly dedicated to that goal, their life would be showing that they're committed to the action steps that lead to that goal. And the actions that lead to that goal is having an edge, putting that edge into a mechanical trading plan, and then consistently executing on that mechanical trading plan with a balanced state of mind over a long period of time. That's what's going to yield them consistent profitability. And this is what I've observed as one of the habits of the most highly effective traders, is that they have a high value on doing the action steps that actually lead to consistent profitability and lead to consistent profits. And they're focused on doing the action steps, which is the process. And yes, they may have a goal or a dream or a vision about the outcome, but what they're focused on day to day is the action, the process. And that ultimately leads to the outcome. Whereas amateur traders that don't have very good results, what they're doing is they're fixating on the outcome and they're not committed to the actual process. Their life doesn't demonstrate that they're committed to the actual process. And you know what? This isn't difficult to fix. All you have to do is start doing the action steps that lead to consistent profitability. And these we're going to elaborate on more in these habits. But just as a quick overview, I mentioned before, you need to have an edge that's proven. You need to put that edge into a mechanical trading plan. If you don't already have a mechanical trading plan, I've got the free 6-figure template in the link in the description. Download that and use that. Then you need to manage your expectations to manage fear and greed prior to trades. And I've got the Bulletproof Your Mindset tool in the link in the description to help you do that. And then number 4, you need to structure your life, all areas of life, in a way that allows you to consistently execute on your trading plan with a balanced state of mind. And we're going to elaborate more on these, but the first habit is that highly effective traders value doing the action steps. The second thing is these highly effective traders have clear and precise goals in their trading and in all other areas of life. All areas of life. And let's start with trading, why it's important to have clear goals in your trading. And then we'll talk about the rest of the areas of life. These traders know where they want to get to. They know exactly where they want to be in terms of how much funding they have and with which companies. And this is all, yes, outcome-based. But the reason why this is important, where they want to get to is important, is because then what they do is they ask themselves, all right, where am I currently? And what's the process? What's the strategy that's going to help me? What's the process, the strategy? What are the action steps that are going to help me get from where I currently am to that outcome? But they're so clear in their mind about where they want to be, it becomes very easy in helping them navigate to get there. If you don't know where you are, you don't know where you want to get to, you've got no hope in being able to accomplish your goal. Okay? So these traders know where they are, they know where they want to get to in their trading and also all areas of life. And the reason it's important to have goals in all areas of life is because any of the areas that you're not focused on empowering, they're ultimately going to be a distraction and stress and frustration to your trading. For example, the most common example I see is traders neglect their relationships, or they neglect their health, and then they have challenges in their health or their relationships, which then in turn affects their trading performance. So it's important as a trader to empower all areas of your life, because any area you leave unempowered is ultimately going to affect your trading. And then the third habit is that these traders, now that they know, and so the first one is they have a high value on the action steps. The third one is they actually structure the action steps. So they may have a calendar, or they may have a structure that everybody does it a little bit differently, but they have a structure and a process for their action steps. And they know where they want to get to. They know the specific action steps. They've structured them into their life, and they have a high value on doing them. And every single day they focus on doing them. Okay. Then the next habit of highly effective traders is they've got a 100% mechanical trading plan. You cannot expect consistent profitability unless you're consistently executing on a plan. How can you expect yourself to consistently execute on a plan, or to have consistency in the way you execute, if you don't have a step-by-step process that's guiding your execution? And this is why surgeons and doctors and pilots and anybody in a high-performing endeavor, they have processes. They have what is called a standard operating procedure of a proven process of what to do in certain high-pressure environments. And as traders, we need those as well. Otherwise, we're going to activate our emotional part of our brain, our amygdala. That's going to fire up, and we're going to make irrational decisions that aren't part of our edge. We need to have a 100% mechanical trading plan, because our focus needs to be on consistently executing on an edge. So you need to be certain that you have an edge, and then you need to put that edge into a mechanical trading plan, because that's what you need if you want consistent profitability. You need to have consistent execution on a particular edge. Then, once you have that edge, the fifth habit of highly effective traders is they then start to focus on their psychology and their mindset, and they realize that in order for me to have consistent profitability, now that I have a strategy, I need to adhere to this strategy. I need to adhere to this trading plan. So the first thing they do is they manage their expectations. Because your expectation on the outcome is going to influence the decision you make prior to the trade. If you have a certain idea of where you think euro dollar is going to be in a certain time frame, let's say you think euro dollar is going to hit a certain level higher than what it currently is in the next 30 minutes, and you create this idea in your mind and you start forcing these ideas onto the market, then what's going to happen is you're going to have this greed, this idea that, you know what, euro dollar is going to move this quickly to this direction. I don't want to miss out on that. You're going to have fear, and you're going to have greed, you're going to have FOMO, fear of missing out on that. And if euro dollar gets to this price, I'm going to make this money, it's going to help me pass this funded account, it's going to get me all these things. And then you put all these ideas and all these fantasies that you've just created in your mind, you project them onto the market. And in that state, you've got fear of missing out on all that stuff that you've created in your mind, and you have a greed to get after all that stuff. And guess what? If you dangle that carrot in front of your face as a trader, it's going to be very difficult to stick to your trading plan. It's going to be very difficult to stick to your processes. And so too, if you then take a trade based on your expectations, you're not taking trades based on your edge. And one level deeper, if you're taking a trade based on a positive expectation, if the market doesn't give that to you on that individual trade, which it may not, guess what the opposite of pleasure is? You get pain. If you're putting your expectations way up on a pedestal and there's a lot of pleasure and positive associated to it, the moment you don't get that, you get the negative, you get the pain. So by setting and projecting outcome-based expectations, you're not only going to go away from your trading plan, away from your edge, but you're also going to leave yourself highly vulnerable to emotional swings, and you're leaving that in the hands of the market. And this is why I created the Bulletproof Your Mindset tool. This is a completely free tool in the link in the description. And this tool, what it does is it helps you bring to surface any outcome-based expectations that you have on the market, that you're projecting onto the market. It helps you ground them with questions completely free. There's a set of questions I put in there around, questioning your thought process. Pat, nobody has any idea of what's going to happen next in the market. Who are you to try and predict that or think that you can predict what's going to happen next? And it's a set of questions that help you ground your expectations. And really it's asking you, is it part of your trading plan or not? So this tool helps you ground outcome-based expectations and guides you to making decisions that are only in alignment with your trading plan. Okay? This is what I I initially created this tool after working with hundreds of traders and seeing the thought process that they're going through, the most successful ones, and what differentiates the amateur versus the master. The master is one who is consistently focused on sticking to their process, whereas the amateur is consistently thinking, what's going to happen next? How can I capture the next move in the market? And they're forcing ideas. So that tool was an absolute game changer for me when I started to observe many, many traders. Then, highly effective traders are then taking one step deeper and they're addressing the subconscious fear and greed, which is driven by resentments and infatuations of the past. And if you have in your mind a certain resentment logged in the past over a losing trade, positive, negative, future, past, your mind works like a mirror. The past mirrors into the future. And if you have a resentment logged in the past over a losing trade or over a loss in business or a loss in a relationship or something like that, and you've got that logged in your subconscious mind, or many, many little charges, and they're all clustered together, then you're going to have a fear in the future of experiencing that pain again. And that fear is going to take you away from your trading plan. So too, if you have all these positive infatuations over wins in the past and it's logged in the subconscious mind, you're going to have a fantasy of the future to experience that again. And you may not be consciously aware of that. It may be a very quiet whisper at the back of your head. And if you're not aware of that, your decisions are going to be run by your subconscious mind and your fear and greed and your resentments and infatuations, as opposed to your process and your trading plan. And it's the traders who go in there, the highly effective traders, and they go in and neutralize and address these through questioning processes and self-awareness and exercise that I teach in the 12-week program. And they go and address these that can also have control over the fear and greed. This is greed, by the way. Fear and greed of the future. And they get back to being present with the market and just sticking to their trading plan. So highly effective traders do the mindset work necessary to address fear and greed on a subconscious level. Highly effective traders have also seen they don't get so addicted to winning and happy when they win. So many traders go through this boom and bust. They get very, very happy when they win, very positive when they win, and that leads them to becoming complacent and thinking they're invincible and forcing low quality setups into the market. And they then go into the bust cycle and they go really depressed and really sad. And when they're really depressed and sad, they stick to only taking the high quality setups and they get back on a few wins. And then they get happy and positive again and they start forcing ideas and they get negative and sad. And they do this for the whole trading journey and they get stuck in the boom, bust cycle. Boom, bust, boom. This explains why most traders cannot break out of break-even results. Whereas the most highly effective traders, they start to think like professional traders. They don't get happy when they win necessarily. They don't get sad when they lose. What they start to do is they get back to this state of equilibrium. They're a little bit more balanced. When they have that initial feeling of positive and happy and a really great win, they ask themselves good questions to get themselves back to a state of balance, the trading plan. And when they get really, really sad and negative, they ask themselves a good set of questions to get back to this state of equilibrium and balance. And they do that throughout their journey so that they're not caught up in this up and down. They're just more balanced and more focused on their process. And they get out of the outcome. This is all outcome here. They get out of the outcome, the positive, negative outcome, and they stick to the process, which is the center path here. And they have good processes and mental models to help them do that. One of those mental models is zooming out and not getting too caught up on that one individual trade, but putting that in context of a larger sample space. Highly effective traders have also done a lot of work on their beliefs and their programming. They're aware of injected beliefs from society and from parents and from schooling and from maybe religions or whatever around what is good and evil, what is right and wrong, money, whether that's good or evil in their mind. And they're aware of all these winning and losing, wealth. Because, believe it or not, some people they get programmed very early in life into thinking that money is evil or money is good, really good, or or wealthy people are crook or corrupt, or or winning is very, very good and losing is very bad and have to be punished. So if a trader gets programmed into this belief system of good and bad around winning and losing or money, then that's going to impact their ability to trade their trading plan successfully. If you see winning as good or money as good and you put it up on a pedestal, then you're going to be infatuated over winning. You're going to fear losing the money you gain. You've got fear that comes into the equation. And you're going to get puffed up and into this state of pride when you win, which is the boom and bust cycle talking about before. And you become an emotional trader because you make this profit or you get this funded account, you don't want to lose it. And you have fear of losing it. And you get fear of, you get a lot of stress in your trading. And if you see money as bad or losing as bad, then you're going to fear gaining it. And you're not going to accumulate wealth. Whenever you get wealth, you're going to spend it or splurge it or get rid of it consciously or subconsciously. So if you see money as good or money as evil and you have these imbalanced beliefs or programming about money, you're not going to be able to manage money effectively. The only way you can really trade your plan successfully and accumulate wealth as a trader is if you see money for what it truly is and you've got a balanced perspective on it. And you see winning and losing for what they truly are and you've got a balanced perspective on it. The truth is, money is neither good nor evil. It's just a means of fair exchange. It was established to help people facilitate trade. So any good or evil that we label money is our own interpretation. It's our own stuff that we need to work through. Same with winning and losing. Winning and losing are our own judgments that we've accumulated and we stored through association and through belief systems and through programming throughout our life. The best traders are aware of their beliefs, their programming. They question them and they understand why they're there, and they if the belief isn't helping them anymore, they say, you know what, it's time to let go of this and move on. Highly effective traders have a high level of self-confidence because they're not minimizing themselves to mentors, trading mentors, or to funded accounts, or to goals. So many traders are putting their trading mentors or other traders up on a pedestal, or they're putting a funded account up on a pedestal. And as a result, what they're doing is they're self-minimizing. Whenever we exaggerate other, we minimize self. And the best traders have this level of self-confidence that they recognize that their mentor has two sides to them. And they have a balanced perspective on their mentor. They take them off the pedestal. They recognize that funded accounts have drawbacks and disservices as well that they're aware of. And the best, most highly effective traders aren't putting things up on a pedestal. They're aware of the drawbacks. They're aware of the other side. They're aware of the risks. And they plan contingencies for each of these so that, guess what? That whenever you put something up on a pedestal and self-minimize, you kill your confidence. Whereas the best highly effective traders have leveled themselves with their mentors and funded accounts, and they're seeing them on an equal playing field, so they have self-confidence. They can easily accomplish funded accounts. And they can easily recognize that, you know what, if this mentor is teaching me a strategy, it took him 9 years to learn, I can learn it in 3 to 6 months. If I go above and beyond to study it and develop it and make it my own, I can outperform my mentor. And I believe that it's a poor student who doesn't outperform their mentor. So traders, the issue here though is traders are putting their mentors up on a pedestal. They're only seeing the positive side of them, and they're not making themselves aware of the other side of the mentor. And then all of a sudden they're looking at them with rose-colored glasses. So the best traders take these big goals in their mind off the pedestal and they regain their confidence. Highly effective traders also know how to redefine and how to set a new standard in their life. They've got higher principles and they have a higher standard than anybody else. You know, there's a certain standard of what's a good income in society. I think most people in society would agree that making $100,000 a year is quite a good income. And the traders, what they do is they have a look at that, they recognize that, but they realize that they don't want to play on the same playing field as everybody else. They set bigger goals, more audacious goals, especially financially, and then guess what? They back it up by doing more work and smarter work. And they have strategies and action steps that will allow them to actually accomplish that. So the best traders that I've observed, they don't buy into a lot of the crap and a lot of the standards and ceilings that are set in society. They set their own, and then they work 10 times harder than everybody else to accomplish them. The other thing that I've really observed with very good traders, especially with the prop firm industry, is especially now with Telos getting more and more traders to come through, and I see that the traders who tend to do very well in prop firms comes back to this principle over here. They're not infatuated with the prop firm. They're not obsessing over the financials that can come from a prop firm. A very worthy exercise that I take my students through is I get them to list down all the risks, all the drawbacks, all the disservices of a goal. For example, getting $100,000 from a prop firm. And the moment they find all the risks and all the drawbacks and all the disservices, and they plan contingencies for them, okay, if this risk happens, this is what I'm going to do. Or if this risk happens, this is my game plan. So the best traders, they've taken the goal off the pedestal and they've planned and prepared contingencies for everything that could go wrong. So these traders they're not self-minimized to a goal, and they're not going into that goal blindly thinking it's going to be all positive, but they're aware of the risks and drawbacks, and they prepare and they plan for them. And if the risks do come true, they've got contingencies they act on. Okay? This is what the best traders are doing, the highly effective traders. That's how they're getting funded, and they're sustaining that funding because they're not pursuing a fantasy in their mind that's all positive, but they're seeing a funded account has both benefits and drawbacks. When the drawbacks happen, I just act this way because I've got a plan, I've got a contingency. And the final habit of the most highly effective traders is that they have a broader wealth creation system. They have a part-time or a full-time income through employment or through a business, so they don't need to make money from trading. They have multiple prop firm accounts with multiple different companies, so they're diversified. They have multiple income streams, again, through employment, through business, through trading, multiple prop firms. When they get very good with their trading, they set up alternative investments such as private investment. And then all the income that comes in, they put into a portion of it, they put into savings. And they have cash savings. And then they also take a portion of what spills over their cash savings. Maybe they have 6 months stashed. A portion that spills over the 6 months cash savings, they put into investments. Income producing investments. And what happens is they've got a broader, more diversified income stream. And as a result, they build more and more generational wealth, and they take a lot of pressure off their trading to have to make money. And as a result, they make more money from their trading because they're just focused on the process. So in summary, this is what I've observed as the 12 habits of the most highly effective traders. These are also the base principles that I've put into the 12-week program. Whereas in the 12-week program, we go one level, multiple levels deeper, and I give you the tools, I give you the accountability, I give you the coaching, I give you everything else you need to actually implement these on a deep level in your trading. I've seen these 12 principles make a significant difference in my students and my clients' trading performance. And it's really, really cool to see that you can take a principle, you can embody it, you can implement it into your trading, and that correlates to lower stress, better trading results, more funding, more payouts, etc., etc. So if you found this video useful, please like, comment, and subscribe. Share it with those trading friends you know will get value from it. And I look forward to seeing you all in the next video.